trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to be talking about the U.S. dollar here now. This is the dollar index. As you can see here, we've been in a 4-day rally. We made the ABCD on the bottom, right exactly at the 61% retracement, and now we're having this move right here. Now, what we need to do is we need to move this up like this, and what we're going to do is we're going to check to see if that's a 382 off of the last 382. So you just take your move, measure and move down right there, and there you see it went to the 50% level. It didn't stop at 382, it went to 50%. And if you look at it real closely, you can see an ABCD. You can see it closely if you go down to an hourly chart. You'll see it popping up, and there's your ABCD right there in the euro. And that's all that is, folks. It's just an ABCD pattern right there. It's been taking 4-day rally, hasn't done very much at all. And if you take this out and just start looking at the old thing, this is the last time we had a major rally. That took 4 or 5 days. So let's see, that looks like it's exactly 50%. Part it in, there it is right there. It's exactly 50%. That means that this one is probably exactly 382 because it's also a very big correction. And you put that one in, and there it is right there. So you've got a 382 and a 50% right in this, so it's held its own right here, but that's about all you can say. Nothing more, nothing less. Okay, now this is the gold market. You'll notice we had a big break. Went up $100, broke down, rallied up to exactly 382, couldn't even make an ABCD to the downside. And then this morning, just as the report was coming out, pulled back right to the 382 and off to the races it went. So looks like gold's going to be going higher, folks. That's the bottom line. Looking at this, there's nothing holding it back. And if you look at the sister of this, which is silver, I wouldn't even touch this on the short side if they'll let you trade for free and commission free. Hold on one second here. Well, it's not the commission that kills you. It's your bad mistake of putting a trade on. Here's a silver, and we'll get it up here. See what we have here for it. This is the, I think this must be the daily. Yep, we don't want that. Let's get up here. Wow, look at this. New highs already. Look at a smaller time frame, because this is what I've been following here on the smaller time frame with silver. You can see there's the last few days here. The last pullback right to the 618. Okay, let's get this out of the way so you'll be able to see it easy enough. Okay. And there's your 618 right there. Oh, this is drawn wrong. Lair, hold on. These things move around a little bit, and we want to check and see that we have the right 382. There's your low, and there it is right there. We hit it just the other day. Now we're moving up, and as you can see here, we've got a nice little move going right here in the silver. I mean, this is really strong, folks. Look at this. This is the pullback, and look what it had today from your low up to your high. Oh, it just misses it by 1 penny, folks. And now you can see we're moving up to the 1.618 level right now. So it's important, folks, if you're going to be doing some of these things, because that leads you to the ABCD structure that we're hitting right about now. There it is right there. Don't go selling it. I'm just showing you the pattern. Well, you can sell, actually, you can sell anything you want, because right there is your number, 67.54. It's trading at 67.60. The high has been 67. How high was that? 67.65. So it's been 10 cents higher. And that's where we are right now here with the silver. Okay, I am not telling you to sell this. I'm just saying I'm giving you some information. This is a very strong trending market, and it's a Friday and an up week and an up month and an up day. Not today, folks. Maybe Monday or Tuesday, but not today. That means it probably will be today. Okay, we got the gold out of the way here. Now, next thing we want to take a quick look at here, there's the crude oil. If you just looked here, you'll see we just popped up really strongly here in the crude. I think we were just getting ready to say something about that, and that's where we are right now. You notice this has been following so nicely. Okay, I'll just get this up here. And all you could do here was make a 382 retracement right here. So that was the first sign that, wow, maybe this thing's got a lot of power. And then you can see there's the power coming in a little bit later. Once we cleared this level right here, remember we sold it here, it made an ABCD to the downside. So this is a big contract, folks. And as far as, shut the front door. This doesn't allow me to draw pictures in. I don't know what the answer. Yeah, see, it doesn't even allow me to connect. Well, you can see the 382 retracement here, and that's what we're paying close attention to here this morning. Okay, now let's take a quick look at the silver market, because it you can see here's where we are in silver. Just keeps going higher and higher. Refresh. Hold on a second. There's where we are. We made new highs on the week, up month. That's an outside week. We made a lower low and a higher high on the same week, and probably in the last, it has to be the last few days, because there's your 382 from the other day. Okay, that's it right here from this one right back here. Now we're coming up into, there's nothing here, folks. This morning or last night, if you've been watching silver really closely, there it was on Thursday. If you wait for Friday, watch for a strong trending market and the old, guess what? 382, there it is right there. And bada bing, bada boom, it goes right up and completes the A, B, C, D pattern right here. As we're speaking right now, we'll just draw it in, and you'll see that these things line up pretty doggone good. So it's very low risk here, folks, because we're trading at 67.61. You got to put a stop at 67.82. That means you're going to be risking 500 American dollars if you want to do it. So if you're going to do it, this is the time to do it, and put your stop in. You got to have that stop in, because when these things fail, and when they fail, they go farther than one would like to think. You'll run out of money before you run out of time trading silver, because it has a tendency to go up quite a bit. All right, now we'll move over here. We have Mike Moore coming up, but let's take a look here at the euro, because it's been acting pretty nicely. We can see now we've had the lower tops in here. All right, now what we want to do is just like we did with the U.S. dollar. We have a new low here. Okay, so just looking at this one right here, you can see that it's a little above that level right there. It looks like it's at the 50% level. Yeah, well, a little above the 50%. And if that's the case, it's not even making a 382 off of the big high that we had right back here. Oh, dear. Did it really? Where is it? Come on. Wow, misses it by one tick, boys and girls. Maybe these things actually do work. I'm not following this. I'm following the stock indices, crude oil, and gold. Those are the ones that I'm following closely. And the gold was very, very wild today, and it continues to be, but we hung in there pretty good and did all right. So let's take a little break, and we'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, at 4 o'clock this morning, the Japanese decided to raise interest rates by 0.1% or whatever it was. You can see here, we almost matched the high from way back here on November the 22nd. We missed it by 8 pips, but you can see there's an ABCD pattern here. When that news came out, all I did was I wanted to see how the market was going to handle it. So as you'll see here, there's where the news came out, right there, okay? And you can see after that, we've had a pretty big move. This thing, folks, this thing was going up already. No, wait just a minute. I got something wrong here, folks. There's where it occurred right here. There it is right there, 1 o'clock in the morning. That big bar right there. I want to bring this over to you. Sorry, I got a little confused here because it's such a big move. So here it is there, 2 o'clock in the morning, okay? You can see the market has a big move and backs off a little bit and then takes off. Now, this was important because if you looked at it from the low back here to the high right there, that takes you exactly to that 382 right here, the secondary one. This first one isn't. It's that secondary one that causes it to work. And then you can see the ABCD on this measures way up in here. Now, if that's correct, this has got to be a 382 because we had a pretty good sell-off here of about 35 pips. In the yen, that is a lot. So you go to your low right here, and up to your high, and there it is right there, boys and girls. I think it hit it just about exactly. Looks like it's 2 pips off, and now we're still moving higher. Okay, let's move on here, and I want to talk to you just a little bit about something. We've got Mike Moore coming up, but let's get down to brass tacks, folks, and ask ourselves some simple questions. Everybody knows, I don't care if you're a paper boy, shoe shine salesman, whatever you are, a technical analyst, everybody's talking about AI. These are the key stocks in the AI. I Googled it. First one is AMD, okay? This has made a major top here several months ago, okay? You see we're down 20% from that high. Look at Amazon, really big into it. Made a high several weeks ago, still going down. With bullish data coming out every time. Look at Avco, folks. It's down here. Avco's dropped over $100 with all this bullish news that's coming out. Look at Google. That's the leader of the pack. And, we're still down in this area. This is a daily, so it never really went anywhere after that big run up, okay? The reason why I'm saying is there's something not right with the picture. Meta, we already seen what's happened. That's had a huge sell-off. And if we look at Microsoft, that topped 8-9 weeks ago. So even though the news is Super Bowl, we got to do the big one, which is NVIDIA. Now, you find something bullish about this one, folks. It's trading at 176 today. Come on, with all that bullish news that's out there, look at it. You got a perfect head and shoulders pattern. Something's not right. I tried to do this to let you know. Look at Oracle. You already seen what's happened. Oracle's up about 10% today. Where's it trading? Right here. It's up 10%, and it's still trading at 189 because it's had a pretty big sell-off to the downside. And then Tucson Semiconductor, Taiwan Semiconductor, also has been up here for 7 or 8 weeks. Folks, if you'll remember back when there was negative interest rates in the Treasury bonds, and I was telling the folks, this isn't right, there's something wrong here, then you better pay attention. Just use common sense. That's really it. Now, I wanted to show you this, the standard deviations, because we've had wild swings here in the market. This is the standard deviation that we had just the other day. Have the run up, still going higher, but it really is amazing how well it works, folks. You can see the AB equals CD to the downside, which is another one that we always like to use. So let's get this out of the way here. I've got a little bit of a cold, but nothing serious. All right, we'll get up here. We want to bring up the chart of Tesla. Still acting extremely bullish, folks. He's still going to be able to eat out a couple nights a week after all this is over. I don't even know what the SpaceX is, but it's a pretty big deal because everybody wants to buy it. That ought to be your first sign to maybe take a second look. All right, we've been here now for 1, 2, 3, 4, 5 days at this level here around 480. The high was 494, so it stayed here for 5 days, but we gapped up. See, we gapped up there. Now, if this was really super bullish and gapped up like this, it should continue running. Heck, we had a big sell-off, and now we're back there again. But we didn't fill that gap yet, as of yet. So it's still extremely bullish. Don't want to stand in front of that freight train. That guy's he's a real bona fide genius, for heaven's sakes. We probably have the same IQ, except I had to take the test 7 times for me to get there. But let's move on here and see where we go here with a couple other things. Now, we were looking at something in the NASDAQ. Let's just see how that ended up working. I didn't even put the trade on because I just had I've had all kinds of data problems. And let's just move it out of the way here. Hopefully we'll find it. I got to do this way, folks. I got to put him in file. Otherwise I'll never see him again. So NASDAQ is, okay, where are we at, NASDAQ? Can't even find it. I think we went through it, didn't we, or not? Yeah, it's doing pretty much the same we thought it was going to do. See, it's just, we went up there and then we're still moving down. No big deal. Okay? All right. Now, the one to sell, if you're going to do something, is this one right here. This is the Russell. See how the Russell is just inverted right here, getting ready to go higher? This is definitely an inversion. You see, it was coming down perfectly, acting beautifully all day today. And look at it. Now it's not working anymore. See, the correlation is gone right there. That's where the correlation said goodbye. That was probably at a 50% retracement of that move right there. Exactly. And there's where we are. But let's look at it on the hourly chart. And you'll see, where are you, folks? You're making an ABCD up here at the 50% level right there. But the trouble is, the ABCD is going to take you a little higher. That's going to bring you up into that level here, which is up around 2567. So if you see 2567 today, that's certainly doable because that's a Gartley pattern in a very, very bullish market. There's your X, A, B, C, D coming in right there. It'll either stop right here or right there. That's your guess that you want to be watching, okay? 256 or 253. Let's put the beeper in. We've got Mike on, but he won't bother us if the beeper comes on, and we'll see how it holds up. All right, now let's look at the Dow Jones. We already did the NASDAQ here. Hold on a second. I mean, the the dollar index. Sorry, boys and girls. Okay, this is starting to work okay, which is fine with me. All right, now let's move over here and take a look at the euro. We've had a little bit of an action here, but really not very much. You know, we've on this daily, folks, we've made some type of a pretty good high up in here. If that dollar index has made a good bottom, okay, there it is. Now we had a sell-off this morning. There's a euro. Let's just clean that up just a tiny bit so we can see it. Okay, there's a low. This is probably exactly 382 after the news on the Japanese came out. They all have their ideas. Yeah, there it is. There's your 382 pullback. Now we're having a little bit of a rally to the upside. So I think we've got a break coming up, and Mike Moore will be our guest. So stay tuned, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstaddt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we have Mike Moore of Moore Analytics in the house. Are you there, Mike?
Larry, how are you? Yes, can you see my screen?
Coming in good, my friend. We have two questions right off the bat. I don't know if you can answer them or not, but the gentleman would like to know your opinion of XOM and CVX. I think CVX is Chevron, and XOM must be ExxonMobil, would be my guess. But do you have do you follow the oil stocks at all?
No.
Oh, that's your opinion. Pierre, sorry about that, my friend. Let's continue, Mike. What are you looking at today in the crude oil complex?
I just don't follow them, sorry. Okay.
No, you don't have to, hey, you don't have to be sorry for not following stocks. I don't either. I'm certainly not sorry. Go ahead, buddy.
The stock should be following what the commodities are doing. I'm kidding.
Yeah, that's for sure.
Anyway, the crude here, we're easing our way back up over the past couple of days. Thank you for the question, by the way. You wanted me to start off with crude oil, right?
Yes, please. And then do Brent, and then we'll move on natural gas and stuff.
Okay, so crude on I wanted to trade back below 78.49, warned a solid pressure for days. It came off $23.37 from that. A lot of other bearish calls in here. I'm not going to go through all those. Then we held exhaustion below. I said, note I would at the same time warn we may be in the last stretch of the lower time frame, move down from 70.16 with areas of possible exhaustion at 54.72 and lower. We're currently holding the upper of these with the 54.89 low and a rally to $1.96. And then in here, we've kind of gotten chopped through a couple different formations in this tight area, but we've just broken above this formation, which got us bullish, which came in here at 56.16 minus 1.7 per hour starting in the morning. And now we're challenging this main formation right here. So that's a key formation because that formation was the one right here where I said we were projected downward $5.50 minimum, $27 plus maximum. So we only attained $1.67 of that before short covering and being put on hold. But we're bullish from above this line. And if it takes out this line decently, which is going to come in at 56.61, if we take that out solidly, that'll warn of decent strength, likely for days, probably a run back up to the 59 area. If we fail back down through this line, that's going to warrant a decent pressure. That's going to come in at 55.99, minus 1.7 per hour, starting at 1 o'clock p.m. Eastern Standard Time. And finally, a maintained gap higher on Monday will also leave a minor bullish reversal below. So again, this line very key. If we were to break above it solidly and back down through it solidly, look for solid pressure to come in. Give me just 1 second, will you? I just want to calculate something real quick. A solid penetration in there today is 32 ticks. Okay, onto the RBOB, or unleaded gasoline. I warned of range expansion today. Okay, in the RBOB, we held exhaustion above at with a 195.17 high and rolled over 27.22 cents. Number of other bearish calls in here. More recently, I said the trade below 175.63 projects this downward 21 cents minimum, 36 cents plus maximum. We've only seen 7.68 cents of that so far. And currently, this has just been chopping around here. We came within 2 ticks of a long above this formation this morning, but since it was at 8 o'clock, it's a higher threshold. If we do see a decent break above this line, which is going to come in at 170.71 as of 1 o'clock p.m. Eastern Standard Time, decreasing 2 ticks per hour. If we break above that by 85 ticks, that's going to warrant a decent strength. If we were to fail below this formation right here, which is going to come in at 169.70 plus 1.3 per hour, that'll warrant a decent pressure. And both of those, if we break above decently or back down below decently and back up through it, would be a fade. But these are both minor formations. Just be careful. It's kind of choppy right in here. We've had a very extensive move down, so sometimes you'll see some chop before it really makes this decision. But if we get above this line right here in the days ahead, then that's going to change the whole picture. That line has as much gravity as that one in the crude oil. That comes in at 175.99 and moves very slowly. So 175.99 to 176.02. But if we broke above there decently, that would warn a strength for days. And in the heating oil, I warned a range expansion today. We're already seeing that on the day. That was right here. I said today has a good likelihood of seeing range expansion. We had been coming off for a while, trade below 273, 247.35. I said projects this downward 16.5 cents plus. We attained 35.16 cents of that so far, and a number of other bearish calls. Those were all put on hold with the trade above 215.37. Now we popped above that, but then rolled all the way back over down into here. So obviously that is sort of null at this point because you'd be way below whatever your stop is. But we are still above the line, which means that this is usually probably going to chop sideways for a bit before it rallies.
Okay, I see it.
And the Brent, similar to the WTI, and maintain gap higher on Monday. We'll leave a minor bullish reversal below. And in the Brent, the break back below 64.37 brought in $5.65 of pressure. I also had another bearish call in there, and then the trade below 61.58 projects this downward $1.30 minimum, $5 plus maximum. So we attained 286 of that so far, but those are on hold. Said the trade above 59.69 this morning warned a strength. That was the break above this line, and we're starting to see that follow through. If we take out this line up in here, that's another key line in there. That's going to come in at 61.85 plus 0.5 of a tick per hour starting at 1 o'clock p.m. And then that would warn of strength for days as well. And the gas oil, which is similar to the...
I think we got a break coming up here, Mike.
Okay.
We'll be... Oh, no, we got 52 seconds. I'm sorry. Please go. Okay. Please continue. My clock is wrong.
That's all right. Well, the gas oil here, we're bearish in here. We held exhaustion above with an 805 high, rolled over $200. A number of other bearish calls are all on hold. I said the trade below 617.20 warrants a decent pressure. That was the break below this line, although I did not suggest leaning against it as a short, even though I said it should come off. If we were to trade back above that line, that'll warrant a decent strength.
All right, we'll have a day break with Mike Moore, and we'll be back with Mike in just a few minutes. Stay tuned, Mike.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
I'm in my movie. I'm in my video. Please don't get in the background.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Mike. More and more analytics. Please continue, Mike.
Okay, Larry, I was just saying in the gas oil, we've been bearish. If we break above this formation right here, which we're close to right now, actually, it comes in at 614.30 minus 29 per hour starting at 1 o'clock p.m. That's going to warrant decent strength. And in the natural gas, we rolled over a number of days, popped here yesterday, and then last night I said we were likely going to see this rally a bit here. So let's get back up to the top.
That's a wild market, that natural gas.
I'm warning the
they're
first
all
market
wild now.
synopsis on 12.5. This went out warning of pressure. We saw $1.44.9 to the downside and a number of other bearish calls in there. Those were all put on hold with the break above the line here. We broke back down below it. But yesterday's formation, although most people consider this bearish, usually has a rally the next day. So we're starting to see some of that right in here. If we were to break above this line, this point right decently at 721.80, that's going to project this upward 370 ticks plus.
Okay. Wow.
You want to take a look at the S&P?
Yes, sir. Everybody likes that.
Okay.
Fire away, my friend. Fire away.
So the S&P 500, we've been bullish overall from 3502. We've seen 3,486 to the upside. A lot of other bullish calls in here. As I was talking on the show, it looked like we were losing momentum here with these highs rolling over like this and the lows rolling over. This really had an opportunity to flush out to the downside, and it didn't. And we broke above this formation right here today, which I said put bearishness on hold. I did not suggest leaning against it as a long, though. I just said to get out of shorts. But then when we broke above this line right here, I did say to get long. So that was right here at get long on a decent penetration above 68.39.26 minus 25 per hour. So we're starting to see some strength coming out of that. And we've taken out these two highs here. So market's really struggling to see what it's going to do. But right now we're bullish. Okay, so. And then in the gold, making all-time highs here. We just broke above another formation. Here's gold right here. So in gold, as you know, if we've been on the show for a while, we've been bullish since August of 2018. And the break above 1183. And we've seen 3,225.8 to the upside. A lot of other bullish calls in here. More recently, I just said the trade above 43.69.40 warrants a strength. We saw 40.1 of that right up to here before rolling over. This was not enough to negate that formation. Today we'd have to break below it by $27. And that formation comes in at 43.54.50 minus 1.3 per hour starting at 1:20 p.m. Eastern Standard Time. And a maintained gap lower in there on Monday would be bearish as well. And then the Bitcoin. And the Bitcoin here, we've been bullish overall from 16,275. We saw 110,965 to the upside. A number of other bullish calls in here. Then we got overall bearish from 124,228. We saw 43,478 to the downside. A lot of other lower time frame calls in either direction, which are on hold. And more recently, I said the trade below 92,420 projects us downward 2,500 minimum, 7,000 plus maximum. We attained 7,095 of that. And then the trade below 92.75 projects us downward 4,000 minimum, 7,000 plus maximum. We attained 4,950 of that so far, but those are on hold. So then the trade above 88.60, 88.610 projects us upward 4,700 minimum, 6,800 plus maximum. I'm sorry, I said decent trade above here, so that's, we have not broken above that yet. That comes in at 88,450 as of 1 o'clock. So 88,450 minus 40 per hour starting at 1 o'clock p.m. That will project this upward 4,700 minimum, 6,800 plus maximum. And then there's other multiple formations above that if we break above those will further warn of strength. If we were to break below this formation here, which came just a few ticks shy of a decent penetration this morning, but if we do see a decent penetration below that, which is going to come in at 86,208 plus 6 per hour starting at 1 o'clock p.m., that will project this downward 3,500 plus. We break below there decently, back up through it decently, look for decent short covering, and the same with the break above here. If we break above that decently and back down through it decently, look for pressure to come in.
Okay. A question from one of our listeners, that is, do you consider the seasonals of cold weather in certain areas, or you just look at, you've answered this question before, you just basically look at the charts like I do, right?
Yeah, well, so let me just describe the theory behind that. The theory behind, or the assumption behind looking at technicals, meaning price, movement, and structure, is that the current price of the market is a reflection of the sum total of all the traders trading that market at a given time and the volume behind them. And so your traders trading the market have their closest finger usually on the interpretation of a lot of those fundamentals far earlier than the fundamentals paint the picture to the average person. So what I've found is the technicals will get you into a move 90% of the time earlier than the fundamentals paint that picture for you that you need to be in that move, and likewise get you out of that move before the fundamentals tell you to get out of it. So the answer to that question is, looking at the price patterns themselves are already pulling in those other factors to a level.
Sure. It's a sum total of all the buyers and sellers. That's what you need to know, you know. Well, at least that's my opinion.
If I could give you a classic example, if I could give you a classic example, the RBOB to heat spread is one of the largest calls I made right around COVID. And normally when COVID came out, heating oil should be going down and RBOB should be going up, or unleaded gasoline should be going up, because you're coming out of the spring and going into the summer season where people are using heating oil less and using gas more. But then I made a bearish call, and a couple days later, COVID came out and shut everything down. And so nobody was able to drive anywhere, and everybody was staying home and using heating oil. And had an absolutely tremendous move to the downside. It would have been the equivalent of 26 crude dollars to the downside in a matter of 2 weeks. And then made a bullish call down on the bottom, and then wrote it up for another $24 to the upside. So that's nothing I could have foreseen by looking at the fundamentals, because I didn't know all that stuff. But then the fundamentals revealed themselves a couple days later. I mean, they're the ones that caused it, but.
Mike, thanks for joining us, buddy. Merry Christmas to you. We'll see you after the first of the year, okay? Tell the folks how they can reach you, and I'll post this so they can see your contact details, all right?
Right. You can just reach me right here at More Analytics or email me at moreanalysis@gmail.com.
Thanks, Mike. Merry Christmas, buddy. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the NASDAQ. You can see we completed the ABCD pattern. I'm sorry, folks, I've got a bad cold. You'll see this ABCD that we have here. Okay, now there's your 382 on the day's range, so that's telling you that that's pretty good support. Friday in an up week, in an up month, in an up day. Don't want to be short too much, so that would have made your profit objective of $500. When I look at charts intraday, folks, I look for 3 or 4, not more than that. I look for 3 or 4. A lot of times I only get filled on 2. Today I got filled on 3. I had 1 winner, 2 losers, but this was a winner. But this was later. So I have 2 and 2. I have 4 trades on though. But my 2 losers were relatively small, but my winner was really pretty big. Anyway, that's what we're paying attention to here today as we go through looking at some of these charts. Now, remember, the U.S. dollar has gotten strong because of the dollar yen, the Japanese yen. That was a big factor. It's the number 2 on the list of percentage. The euro is 53%. of the U.S. dollar index. The Japanese yen is just under 20. Then you have the British pound, and then et cetera, et cetera, et cetera. The reason why this is so important on a short-term basis right now, getting back to this, is that all we've been able to do now, since we've had a correction, is we just came up and touched the 382. There it is right there. And we didn't get above it yet. So if we broke below this, this tells us we're going to come down into this low. If we break above it, then that's it. Now, you might think that's a little, trying to separate chicken salad from chicken soup, but by golly, that's how these markets operate. It gives you a heads up of when they're getting ready to turn. So below here tells us that we're getting ready to move down to this level. That's why if you were using a stop, your stop would be right in here, locking in a profit. Of course, your profit objective was right there on your 382, and that's what we're paying attention to. Okay, folks, we're going to see you on Monday. Live every day in an attitude of gratitude, and may God bless, and do something nice for your friends and neighbors, folks.